65, shake my hand, shake my hand. Good morning. Well, I'm recording this in the morning. You guys are going to see it at 4:30, same day today. It's just that, the students were so kind and they gave me Thursday off. So we didn't have class on Thursday because I was dead tired. And then actually my body went into shell shock on Friday. So I was just like a zombie on Friday. And so it was only yesterday I started to kind of like decompress a 60-page report that I sent out to corporate reports and then kind of like synthesizing it so it's digestible for individual investors, the guys who joined the World Team 3-year program. And I want to get stuck with that today. Today's Sunday, so I'm going to finish it tonight and send the email tonight, right? So that's why I'm pre-recording tonight's War Room. I won't be with you guys in the live, but I will come back before I go to sleep, check through all the questions. So please don't forget to ask questions. Because what I do with that, like last time, 2 weeks ago, I sit through all the comments. If there are no comments and there's no need for me to react. But if there are questions, if there's specific charts that were not looked at and covered, what I'll do then is I'll come back to those. I'll do a part 2 tomorrow, shorter one. Obviously, just pinpointing specific questions that are asked or specific charts. So please don't forget to comment down below, right? But this War Room, I was about to just get into what I want to trade this week, right? Because I've got a lot of running trade ideas. And then I did check that a lot of private students in the private Telegram group want me to go through, I think Liz wants me to go through a lot of the euro pairs. And then there was a request for me to go through the pound pairs a while back, about 3-4 days ago now during the week. I had a look at them, like they were all doing what the governor was doing. So I didn't think there was a big loop there, but we'll go through euro pairs, pound pairs, right? So by themselves already, that's about 13 charts. All right, that's quite a lot. I want to talk a little bit about Nasdaq, Dow Jones, Dow 30, gold, and oil. Right, very important, right? Because market conditions, market sentiment, market conditions, market sentiment, market trend, market conditions, market sentiment, market trend, right? So there's some assets that will give you more now than later. So I just want to make sure I squeeze a couple of stuff in, and then we have to look at a couple of dollar charts as well, just to understand what is going on. So it is quite a mouthful, guys. I mean, when I'm looking at the euro pairs and the pound pairs together, that's 13 charts. My Nasdaq, Dow, gold, USD Swiss franc, JPY, USD CAD, obviously our DXY, BXY, and then oil. I've lost count, but maybe about 21 charts. So I don't know if I can do it all in one go. We shall see. But as usual, if at any point in time what I'm saying makes sense, shines light into something, please don't forget to like, please don't forget to share, please don't forget to subscribe, guys. So let's just get cooking. Our last War Room, I don't know if you guys remember, I started off with what I called, or what is called, the Evergrande crisis, right? And I really want to pick up on that because it's just important, right? So I thought I was going to make separate YouTube videos on contagion and what contagion means in the markets and how to identify longevity of a crisis, and is this really 2008, like I said last week Sunday, and all that kind of stuff. But like I said, it was such a big week for me in the academy. By the way, our reporting went flawless. For those of you who care, the assets we chose during COVID rallied. If you're in South Africa, I was looking at the Glencore chart. So if you're a part of my program, Stocks and Financial Notes, it was just been rebranded now to Wealthy in 3 years. Why? Because I want to keep track of who's in it and how long they're in it. Because before, it was just anyone could join and then they'll get like free stock notes, or if they paid for it, if they're not a student, they have to pay, and they'll just choose. So they'll just choose assets that they wanted, essentially. And that's good and well, but it was difficult for me now as Leroy on the other end to actually know who on earth or how often are you investing. Are you buying into these stocks once a month, which is the recommendation, you dollar cost average? Are you not in them? Are you in them, then you stop, or do you just make one big investment? Which is, none of those things are wrong. It's just that it's difficult for me to track. I want to start, so I've started the program, started on the 1st of October, today is the 3rd. So every year for the next 3 years, I want to track that we're 20 people or 30 people or 50 people, and this is where they are after 3 years of just following instructions, right? Wealthy in 3 years. It's not a quick rich get rich scheme. You don't send me money. I don't want your money. You invest for yourself. What I do, however, is I send you essentially my plan. So my plan that I give to my corporate clients, because we manage their funds, right? And so it's kind of like a watered down version of that. Like if you're a corporate client for 365, what would that look like? And so this past week, we're reviewing a lot of the trades, and I was telling them where I've changed my mind, where I've not changed my mind, where, etc., etc. And I noticed that South Africa over the weekend went into level 1 lockdown, which is, interesting. Because a lot of my trade ideas, investing ideas, rather to be specific, from last year were lockdown ideas. So I will be closing a couple of shares like Glencore. I'm selling to get those profits to put somewhere else. Like Glencore has rallied and given us 123%. A lot of those mining companies that Cyril Ramaphosa are greenlit in June last year, 2020, at that level 3, level 4, the first few companies that got the go-ahead to work under tough COVID restrictions. Obviously, there was a 50% labor cut, etc. Those ones rallied like crazy, and we were on top of them, right? So in front of you is basically an older version of what these stock notes will look like. So it will literally be a list of stuff. So I'll send an email before on what brokers to use, number 1, and the links for that. And then I'll send you a follow-up email on assets specifically. So I'm getting into this. These are the fundamentals. This is what I'm looking at. This is where I'm putting money. This is why I'm doing it, right? So you kind of like have a good idea. There'll always be international stocks and local stocks, right? This new program, the rebranded version, has crypto in it as well. Very, very bullish on crypto for a lot of reasons, and easy equities, right? So this is kind of like the stuff that we're reporting on, like trying to see, well, we bought at this level, we bought this for on behalf of blah, blah, blah. This is where we are now. And the growth has been exponential. I will be doing maybe at some point during the week, a short video on some results, right? But anyways, if you are in the program, don't panic. The email is going out tonight. That's why I'm doing this right now, right? So let's talk. Evergrande was a terrible thing, is a terrible thing. Short story, long story short, is basically, number 1, big Chinese company, right? Number 2, cannot pay its debt, which is about $300 billion. Number 3, multiple banks globally, hedge funds globally exposed to risk because they invested in this big a company. The goal was to build 1.4 million homes in China, right? Because there was a housing crisis. And then out of nowhere, the CCP, Communist Party in China, is starting to take over. They've got like harsh requirements. For example, they can bail out parts of the company if it's in Chinese bonds, but the US dollar bonds will not be bailed out, which is obviously a lot of it is in US dollar bonds. A lot of foreign direct national investment went into Evergrande. What else? Right. So then the big talk last week Sunday was, well, is this not exactly what happened to Lehman Brothers? Is this not the creation of a new crisis? And I was on that bandwagon, and maybe let me just quickly go to the charts, right? And so we saw the impact of Evergrande. I'll go to something popular that everyone can digest, which is something like Nasdaq, right? But it's not just about Nasdaq or stocks, it's about risky assets. Once you understand what a risky asset is, your Euro USD, those are risky assets, Pound USD, risky assets, equities, risky assets, the Nasdaq, the Dow, all these risky assets responded, to the crisis. And we saw a beautiful plummet from Nasdaq. And I say beautiful because some of us have been waiting for this thing, right? And then I saw a cat, it's called a cat dead bounce. When you throw a cat off the roof, it lands on its feet like that. I don't know if you guys can see what I'm doing, but basically it's a cat dead bounce. It landed on its feet there into the only demand available. I highlighted this in yellow in the previous war room. I told people I'm not going to be buying here. I don't trust it, and it was broken. And this to me looks like a cat dead stance. I'm not in it. I don't trust it. And I could be wrong. So markets could rally. If you're into Nasdaq, we can just deal with Nasdaq right now. Let's just deal with it right now while talking about Evergrande. So markets could rally into this, and then I expect some problems here. We'll have to catch sentiment as we go about, or markets could simply just hit 1500, which is quite a psychological part for the markets. Markets were hoping to hold that. If you look carefully where this 500, so this is what I'm talking about. See this there? You see the number across here? This is 1500. So if I make this line, I don't know, white, they see there 1500, right? So a good way to end the month of September was if markets had closed above this 1500 line, right? So you see that would have prevented a bullish engulfing pattern, right? That would have prevented slightly above the green candle. That would have prevented a bullish engulfing pattern. It didn't, right? So I'm not surprised that there's a big green candle now in the beginning of October. I did another video, guys. So, please do subscribe to the channel and hit the notification button, because some of the videos that I push out during the week are very short by design, all right? But the video that I did during the week was about just simply backtesting Nasdaq, that this happens every year, every September, October. Sometimes both September, October are bad, but you guarantee that September is a bad month for Nasdaq and other equities, right? Other stocks. It's literally, that's how it is. And for Bitcoin. And for Bitcoin, September historically is not a good month because this is one world, this is one financial vehicle. I'm not going to redo the back testing again. There is literally a video on our YouTube channel that is my last upload this past week that I timed to do. It's very short. It was me answering one of our students in the private Telegram group. Mr. Marks had asked me to look at Nasdaq, and I deal with this quite thoroughly. Every September this happens, but it has the tendency to be a dip moment. It's a buy the dip opportunity. So this is what I'm saying to you about Evergrande. After a full week of looking at the impact of markets, looking at what's called contagion. Contagion is if China sneezes, what are the African markets going to do? China had COVID. The whole world had COVID. But I'm not saying it like in a Donald Trump way. I'm saying the impact and the fear and all that stuff, how it affected every other market. That's contagion. So is Evergrande going to be a contagion situation? Will it spread across, right? If it does spread across, then we get 2008. After a week of looking at this stuff, and I always go with data, all right? So with me, if I change my mind, which I want to do, Napoleon Hill says successful people make decisions fast and change them slowly, and I completely agree with that, right? A lot of people just procrastinate on everything. So you just move and then you change later if you need to. I'm changing my overall thesis on the Evergrande crisis 7 days later because I've assessed contagion. It's not as bad as I thought it was going to be. I'll be honest. I think there's going to be containment. That's number one. Number two, I think markets are completely, understanding of the situation now, and I think there's been enough data, right? So Evergrande is a terrible stock that's going down. The Chinese stock market in general is a non-starter for investors. I really would suggest pulling out. I personally was going to go very hard in the world of the 3-year program in a lot of Chinese stocks, and I will find some good ones at some point in time, but I'm going to not use it for October, November, December. I'm going to allow the financial quarter to end. I'm going to see what the reset is going to be. Why? China is currently and has always been governed by Maoists, right? Maoists are authoritarian, and they're starting to show their teeth. The idea is capitalism is bad. They will allow it to some degree up until it can generate wealth for all. It's like an old socialist communist type of ideology, not the space to debate it right now. But now that they fundamentally believe they've gotten to a place where they want to be, as Maoists, as communists, as Marxist communists, etc., they are now crushing and punishing capital. We saw it with Alibaba. They literally just took over his entire multi-billionaire company. The gaming company, the global top gaming company in the world, they shut it down and put restrictions of, kids under certain age could only use their service for 3 hours at a time. Like online gaming is just built on that drug, like that mental drug that keeps people on screens all the time. So they came up with their own rules to shut that down. They shut down private online tutoring. Those people who are always in Africa talking about go teach English. There are so many private companies. They've nationalized that entire private education sector, right? So if you see China 50, it's bleeding or has been bleeding. And we spoke about this in previous forums, right? So as far as Evergrande crisis, I want to stop right there. So things are bad, but I think I think it's fair to assume that things are going to stay bad for a while, with Evergrande and China, etc. All right, I'm not buying this, right? This is what you see. Markets broke through a valid governing demand, and already we're starting to see a sell-off. We did speak about that. Too many lines on this chart now. It's going to get confusing. Yeah, I'm not gonna buy. I'm not gonna buy China 50 for a long time. I mean, I had fun selling the stock for a while. You know, the short-term sell trades that we did, you know, a couple of quarters back. But for the most part, took profit, got out, and then somewhere here was not part of this buy. Just watched it, and this buy would have been a flop because I'd have tried to hold forever. So I'm out of China 50 for now. And we'll see. But in terms of the general crisis, I don't think it's going to be a 2008. I think it's a buy the dip opportunity. I think it's a buy the dip opportunity. And if I change my mind, I'll let you guys know. I'm just going to follow the data. I am worried, though, that the Fed is holding a lot of cash. They have literally tripled how much cash they keep on hand per day, right? So it's a long, complicated process and thing to explain, but when the Fed does that, fundamentally, they're expecting a stock market crash like COVID, right? And they want to literally buy everything as low as possible. And it looks like that's what they're preparing for. But I just don't know if it's Evergrande or the housing debt ceiling crisis, which we can talk about another time in the channel, or just a lot of other policies at play. It's kind of like weird. So for now this week, I'm just going to go with my governor, which is always a good thing to do, right? So for Nasdaq, what do I think, right? So this look to me looks like a dead cat bounce. Like I said, price arrived at an area of demand on the daily time frame. Price used 14,600 and potentially a little bit now. 14,600 was what was used, right? And that's okay. Personally, I'm not in this buy. I don't necessarily think I want to be in this buy. If I do catch this buy, I'm going to be buying momentum, right? Which is not the best way to buy any asset. Forex, Nasdaq, buying momentum is never the best, right? You want to buy low, not buy the momentum. But I'm going to watch for a break. If there's a break here, right, that might be a good possibility. Bearing in mind that on the H4 time frame, we've got somewhat of a bullish engulfing chart, right? But for me, risky assets, right? This is a risky asset. Now, why is Nasdaq finally starting to recover after like 5 days of dropping? It's got nothing to do with Evergrande. That's the most annoying thing about markets. The red pill. Well, it's not a red pill. Red pills from the Matrix. There's a new pill that is basically, and let's see if we can find it. Let's see if we can find it. There's a new pill. You know, my senior researchers kind of like brought that on alert, but basically it's a COVID drug that is not like the vaccine. Everyone must get vaccinated, number one, but this is not the vaccine. This is if you're already sick and you're dying, and you know it's terrible. It's terrible. This new pill has given a lot of people a 50% chance of kind of like being resuscitated. That's a big deal, right? So markets are taking any good news to shift the sentiment. The sentiment has been terrible, and this really was based off the pill. Now, I don't know if I'm going to find it here. I'm going through my quick sentiment read. So US-China trade war is about to come. You know, Donald Trump 2017 was a supply to Donald Trump 2018 and 19, that China trade war momentum up. That's what's about to happen here with this thing, and if they don't get a lid on it. But I'm just trying to see if I can find any news around the pill. I don't want to. US COVID death row crosses 700,000, right? So because remember, Delta was a big problem. Bitcoin, US rally highs of the day. Surprising. I don't know. I don't know if they reported on it, but they should have. I mean, this is actually quite big news. I just won't be able to follow or go through all the pages, but I know it's somewhere in it. Just check this between, you know, Friday and Thursday. There's definitely an updated COVID pill that might balance the odds against Delta and just being sick in general, etc. Stagflation is another crisis at risk as well. Yeah, so anyways, this COVID pill basically successfully managed to slow things down, right? Slow down the fear, slow down the panic, etc. I just don't know if I'll be able to find it. Let's see, COVID new pill. technically, had they made it red, that would have been great, right? So it's a day ago, right? So Meg says COVID-19 pill cuts risk of death and reduces hospitalization. This is a big deal. So this is a positive market sentiment, right? So it's about a day ago. So I don't know why I can't find it on Forex Live, but this is it. This is what happened on Friday. This is why markets kind of like really get this. And if this is like a day ago, today is Sunday, I can only imagine, right? So new pill could cut COVID in half. It was eight hours ago. US developed COVID antiviral pill. That's a day ago, right? So what am I saying? I'm saying I do believe that this is going to rally a bit up. Right, I do believe that on the 1 hour time frame on something like Nasdaq, with a bullish engulfing pattern, we're seeing a lot of fight back, right? The buyers are not slowing down. In fact, I've got a PCP, potential continuation pattern, right? So I really genuinely expect a breakout, right? And then something like that, or something like this, right? If you've got a small account, don't even bother trying to time this, because if you want to buy here and it comes all the way down there, this will blow your account while holding. It's 100 points. It will blow your account, right? So you're better off just waiting here at 14,700 and also accepting the risk that markets might leave you behind, right? So that's why I call it a momentum buy, because if you want to catch a momentum buy, you are going to have to be on the other side of the buy, right? So you have to catch it via buy stop or buy stop orders, etc. But yeah, I wouldn't mind parking a pending order somewhere in this zone, something like that, right? I wouldn't mind parking that, but I need to first see, some type of breakout, right? And then if the breakout happens, but this is the bounce and markets don't go beyond this, and then a buy stop, just there's a supply there, right? So you're literally buying against a lot of the last remaining sellers, right? There wasn't much compression in this area of value, and by 1500, it's what really caused the bearish engulfing pattern. And I don't want us to forget that. I don't ever want us to forget that on the monthly time frame, Nasdaq created a supply, which means another crisis could be coming, right? And for me, that's why I'm not excited to buy Nasdaq. In fact, there's almost like a 9 out of 10 chance I will not be in this trade with you. If you do take it, let me know. If I change my mind, I'll let you know on Monday, right? But that's kind of like the buy you're looking at on Nasdaq. So Woru, reduce teaching signals, right? So I'm gonna leave Nasdaq today. I'm gonna quickly go to Dow 30. And the reason why I don't want to teach you in Warren is because I teach every other day during the week in our classes, right? And if the link is down below, if you want to join our remote course, lend supply and demand is down below. There's just a lot of teaching that happens already during the week, and the more I teach on a pair, the less I don't get to see a lot of the other charts, right? Right? US 30, right? Similar pattern, right? Remember, I've taught about this. Always find the primary market. If you want to know what's going on in Pound USD, Euro USD always moves first. Pound USD will always copy Euro USD. They're both risky assets. So we've got the Dow, whose greener candle is far much more bigger than the Nasdaq candle. Why? Because the Dow generally represents the heartbeat of mainstream economies. There's a lot of banks in the Dow 30, and it's like a mixture of banks and industrial sector, right? Which is really a good aggregate of economy, right? So the investors aggregator is the SP 500. Recovery stocks, growth stocks, very different thing. Recovery stocks, tech stocks, Nasdaq 100, right? So you need to kind of like learn your assets, just for a better affair. But you can see here on the daily time frame on Friday, markets were already moving on the Dow 30. Dow data for me in my past life has always been just a little bit kinder and easier to trade, although the bigger the candle on the daily, the more annoying it is. But the clarity, you can get a lot of clarity from it, at least on H4, etc., right? So we've got US 30 kind of like doing some similar stuff, right? So this is what I'll be looking at. You see how Nasdaq is already ready to just explode. Outside of the trend line. Dow's taking her sweet time. So I'm going to see how she deals with this. And I'm going to hope that this gives me an opportunity in the markets for a pullback, right? But then she could just break it. Now, if she gives me an opportunity, then, I'm looking to kind of like catch a trade there for the upside, right? But if that doesn't happen, that's fine. But I'm far much more comfortable, taking a better risk on Dow because of how slower it might move for me, right? But Dow did some freaky stuff last week. I won't lie, like some really. Also, I didn't trade with you guys during this past week. That's why I was quiet in the public Telegram group. I was very focused on my presentation on Wednesday and my presentation on Thursday, right? So it's just been a crazy week, right? So I would actually have to go back to the charts and check out my calls from last week so that we see, so I can report back on the wins and losses. It was very important. We also transparent on that kind of stuff. But personally on my portfolio, there wasn't much growth at all because I was not trading with you last week. But this week, I'm back. We are back, right? So Dow, a level to look out for. I can guarantee you 365 traders, I haven't taught you the stuff. I have in passing, but until you see the structured module 3, you need to know this as quickly as possible. When there's a supply, there is a supply there. And markets are coming parabolic like this, coming strong. Like in my week 3 class last week, before I took off on Thursday. So last week, Wednesday, in that class, I described this as the strongest person in the army shooting an arrow, right? When you shoot an arrow, shoot a gun, shoot a missile, it doesn't matter. The trajectory is always straight. Right. So you know, scientists will tell you, or physicists rather, will tell you that the quickest way from point A to point B is simply a straight line. The quickest way to point A to point B is simply a straight line. And that's because you cut through a lot of stuff. So be very careful when price does stuff like this. When price comes to you in a straight line, there's a high chance that the release, right, the release from the demand is excessive, right? That they really made sure they were aware of how many orders they are here to sell and made sure they overmatch how many orders are here to buy. For an intraday trader, this is lifeline. This is the difference between taking 15 trades in one day on your smaller time frames and losing half and winning half, right? Minus risk to reward ratio and all that kind of stuff. Because supplies like this barely hold if demands or markets are coming so straight like that. So what you want to see for a good supply is you want to see orders build up. You want to see some sideways, we call it accumulation. So you want to see price finally arrive. You want to feel like you're waiting for your bride at the aisle and the anticipation is killing you. When markets come straight like this is the problem. This is a relationship you want to avoid. This is you and your loved one meeting, same drunk in a club and getting married the very next day, right? It's most likely going to end in tears, right? You want to actually see your buyers slow down, your buyers outwork themselves so that by the time your buyers arrive at the supply, the amount of accumulation that's taken place, your sellers can take over, right? So for me, this actually supports the narrative that markets might be extremely bullish, at least for Monday. Monday is low liquidity, so who knows, right? So this is just a level to watch. If they take it out, I hope they take it out and hope there's some type of retracement somewhere, right? Somewhere, let's find it. Nah, right, we'll see, but I'll have to pull out of Fibonacci, etc. But I'm going to wait for this to be taken out first, and I think it will. I think this will be taken out, and then after that, right, we can then kind of like negotiate breakouts, fake outs, etc like that. This is the entire zone for a fake out on Dow 30, right? Just so we're all clear. If markets enter this entire area, crossing on the other side of your trend line, there's a whole supply there. Don't be fooled, right? Your guarantee movement is not when markets break outside the supply. Your guaranteed movement is when markets break outside of the trend line and break the supply. That's what you want to see, right? So maybe a good buy here might turn out after markets have removed this supply, right? Because that's really the problem on Dow, right? So watch out for that. Obviously, I'll be much more clear and coherent with the charts and pictures, and as usual, in our public Telegram group, link down below. I'm in a rush, so many charts to get through. Can't waste time teaching. Gold, because I want to do all these extra charts first before I get to the euro and pound pairs, which is what, if you're a registered student and that's what you want to look at for the week, I have no choice but to give you what you want, right? Generally speaking, war rooms are actually designed for our students. That was always the idea. Why? Because I want them to actually get to see. Originally it was me, and then obviously everyone started trading, those I taught before, but they want you to see these principles every week, turn into life, right? So that it's not just theoretical. Right, we've got an ugly demand on gold. which I've spoken about. That ugly demand on gold created a weekly demand, which I've spoken about. The weekly demand and the ugly demand on gold are all very, very, very interesting areas of value. And you know, one day we're gonna have to find more time to kind of like spend time together. Maybe a war room on Saturday around COT reports, because you gotta learn how to read that data, right? So once you can track those order flows from their side, and combine with how to track order flows from my course, supply and demand course, right? Then you know, right? But we've been waiting for a play here, and it's just been difficult to get one because the gold has an inverse relationship with the dollar, and all of a sudden the dollar was strong because FOMC sentiment, right? Hawkish tone, right? And that hawkish tone was for markets to start pricing that in a month before. The next FOMC meeting where tapering might be announced is the 4th of November. We are literally on the 3rd of October, got 4 weeks of emotional trading, right? Trying to get us to a specific mark that the FOMC is only going to announce on the 4th. And that's based on good jobs data. So this Friday, the 8th of October, NFP, I saw some people claiming they were trading NFP yesterday. Why do Forex traders lie? Why? It's crazy, right? So this coming Friday, NFP has to be good. If NFP is good, we're hoping for a curve on CPI. I'll talk more about that as time comes in. If those two reports are good, we get tapering on the 4th of November. We get tapering, we get a strong dollar. We get a strong dollar, gold will fall. There is a reason. I've taught you before. Look at this. Look at the timing. Remember, markets are random to retail traders who don't know what they're doing. Markets are random to anyone, banks, insurance companies, oil companies. If you have no fundamental intrinsic understanding of how price moves and operates, you are always going to be, tricked out. Look at this stuff here, man. 365 traders, this is for you, right? There's a reason why. There was this sharp fall in gold the other week, and then it did a dead cat bounce. That dead cat bounce right there, right there. I'm using a headset today with a small mic, so it'll be so sad if after this 2-hour recording or however long, I realize that there was no audio. Well, I hope there is, but I'm getting an audio feed, right? So for me, this is on the weekly time frame. I can't pretend I can't see that. Not for my portfolio, not for my account. I can't waste capital taking low probability trades, which are most likely going to be a loss. And then when I review them as a trader, I go, yeah, I knew. I deep down, I knew. There's some traders who I've taught who now know the rules of the game, but still take trades for the sake of trading. And when those trades go bad, they go, damn it, man, glass effect. I knew that. So why are you taking the trades? You don't have a trading journal and you don't have a trading plan. That's what. You have a trading journal and you have a trading plan. You use that as a metric system to judge yourself before you pull the trigger. You do that best if you stop doing market execution trades. Stop that nonsense. Use pending order systems, which gives you enough time to second and third guess yourself. Look at what I'm doing. I do a war room. I write down the stuff I spoke about in the war room. Tomorrow, I'm going to be up at 5 a.m. From 5 a.m. until 12 p.m. I'm going to revisit specifically the charts only discussed in the war room to decide finally if I'm going to trade. There's some times where I'm like, I only take 2 trades from the 10 that we analyzed. Why? Because my goal is capital growth versus just trading for fun and losing money. We have to all get to that stage, right? Win rates are nice. They are very important. Obviously, the most important thing is risk to reward ratio. But slowing down on such things, yes, this worked out perfectly into a supply and back into a demand. And then now we're leaving a demand. But look what happens. Look what happens. Look, it's starting to fail. Structure is talking to us. It's like, listen, man, yeah, there's a governing demand. Leroy said if there's a governing demand, the buyers are in control. But Leroy gave you many other rules around governing demand. Leroy gave you rules about areas of value, glass effect, all those things. Look at this. Price, the first, because most of the buy orders must have been burnt there. This is how high price could go. When markets came back to the exact same area, this is, okay, market structure is changing. When market structure starts to change, we need to start to pay attention because buyers are losing steam. They're losing steam because they're spending their buy orders. So if they sink, they can sink, but they're not going to sink forever. They might sink up to here. What's going on in the month of October? Prices in everything. We have to price in FOMC. We have to price in Evergrande crisis. We have to price in the new COVID pill. We have to price in the foolishness happening in the UK. We have to price all these things in. We have to price in the fact that, you know, if the Queen dies, I'm not saying she's going to die. We're just running what we call scenarios. If the Queen dies in London, right, the Queen of England, you know, if she dies, they literally have to print new currencies, new fiat currencies, and they have to put Prince Charles, I don't know, her son's face on the new pound, right? Literally, like just like that. We know that when you print a whole lot of money, you create QE. We know that charts like pound USD and supplies. So markets react to everything. What you need is a basic setup rule for everything, right? So gold for me is in a demand, but is also slowly but surely changing its market structure. A lot of people act like these trends will be tomorrow. No. These things take time, but we can see it happening. Price is everything in front of us, and we can see it starting to price in stuff. So these contacts that are weakening our weekly demand are also contacts made in our monthly demand. Right? So that's interesting, right? So the next play might be here, where there might be substantial defense for a little bit, and then there's confluence with that over there. All right, so that's where I am with gold on a bigger time frame. But let's drill down a little bit, right? So this week, what do you think? What do I think will happen this week on gold? I'll have to check with the dollar. I never trade them, separately, right? So all of a sudden, right, the whole of last week, basically, not last week, I lied, the whole month of September, right, has just been a dollar, playing around with everyone's feelings, but in the long-term picture, removing supply. So the dollar has just been getting stronger and stronger and stronger. I'm going to focus on where candlesticks close, so the open and close, which means if I draw a trend line like this using the line graph, focused on the open and close of the charts and not just every single activity, I get to see a pure trend line, right? It's not the only way to draw a trend line, because some people like to draw trend lines with wicks, and when I need to see the wicks, I will. But drawing them like this means my wicks will not be included, but the open and close of charts will. And I'm looking at these terms, right? 1, 2, and then we're here now, and a decision needs to be made. If I switch back to candlesticks, you will see that a lot of this stuff cuts out the noise. So this is where price is right now, roughly, right? And then if I use my momentum average in candles, we get this situation here. Yeah, so gold for me, if I was to trade it as a play, from what I'm seeing right now, I would wait for dollar to show me signs of slowing down. And I want to tell you right now, in the short term, and I taught you guys this in the previous war room, when I say short term, because it's important, when I say, guys, this is a trade for the short term, you must know what that means in terms of market language, right? Short term is essentially hours to days, right? That's short term. So, and then long term or medium term, let's start with medium term. Medium term is days to weeks, right? So in the short term and medium term, which is from market opening Monday tomorrow, roughly up until FOMC, days to weeks, right? Short and medium term, I see a strong dollar. And you'll have to find one time in the last 3 months I've been wrong about dollar movement. I mean, these charts are literally in front of us. Like our daily supply, I mean, for the private students, I'd already done an analysis on this and I removed zones in their video. But if you look carefully here, this supply has been removed by last week. I typed here, watch out for this during the week. That setup, bullish engulfing pattern, was removed. There's 2 supplies removed right now in front of us, right? So DXY is dealing with this stuff. And then my bigger supply, my comprende, like my sense of being, because I've been so dollar bearish for the longest of times, has been taken out. So now I'm saying to you guys that our charts have to change. Markets have removed, right, the biggest slowdown, right? The biggest slowdown on the chart was that daily chart, that super duper strong supply that really compressed price for a long time. That's been taken out. Our next area of value at play here is not even the strongest of them all, supplies. 365, you'll note this supply and demand number 5. I'm saying that because I know I'm teaching people as we speak. We're still in week 3 material, but we're on week 4, starting Monday. Don't forget, guys, because we didn't have class on Thursday, class is on tomorrow, Monday. I appreciate you for giving me that time to rest. But now let's look at this supply, the supply that is now in charge, the supply for those of you who were like me as a dollar bear, right? I change when market changes, right? Markets with dollar bear, I was dollar bear. Now I'm very close. Remember I say to you, I'll be very dollar bullish if we cross over 95, but it really doesn't matter, because once we break this supply, and to break this supply, we simply need to go over $94.80, but I like round numbers. But once we break $94.80, essentially it's dollar bull season. Essentially, it is dollar bull season. Now the question is, what's the plan? Will the dollar use the month of October to retrace now, to slow down, to get the perfect buy low? Will things be perfect? Will the dollar get a bump on the 8th of October with strong job numbers, NFP? Nothing in the markets is random. Our job is to find high probable cases and match that and hope, not hope, really, because hope is not a skill, and align all trading routes to that. So if markets were to drop up to here, how long would that take? It took 1, 2, 3, 4, 5 days. It is already Sunday. So if we used Monday, Tuesday, Wednesday, Thursday, and then on Thursday we found ourselves here, what's the scenario? Traders, check this out. I'm not saying this was going to happen, but I'm saying if we get a pullback into this area here, and it's Thursday or Friday, and NFP is good, NFP numbers are strong, NFP numbers are solid, because that's, technically speaking, what we're waiting for. Markets would have arrived at a demand when NFP numbers were strong. So there'll be double confluence for a very good buy. Would it be surprising this would be the better place to buy for this coming week in the market? Why? Because check this out. Look at the structure, right? Oof, that's terrible, right? Markets are right at a demand, blah, 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 blah. What if job numbers are bad? What if and I keep promising to do this video for you. I want to show you the whole year how NFP was used to manipulate retail traders for a better setup for smart money. What if job numbers are bad? Well, would it not be a case of the fact that this candle might be red on Friday, and then on Monday, Tuesday next week, they might save the day, only for price to bounce into a lower demand? Because we also know that when it comes to banks, they will always choose to buy low and sell high if given the opportunity. What would it take for us to trigger that demand? This, by the way, is the real demand that triggered the breaking of supply 1 and supply 2. The buy orders in this demand are very, very strong. So what happens if they use negative NFP, positive CPI? Negative NFP breaks this demand, positive CPI begins the rally. What's going to happen? Because again, on the supply that we're at now, according to my area of value of rules, 1, done. Okay, 2, so I got a fresh touch and a retest. So I'm not looking to sell anymore, unless if I'm in the sell right now. I'm not looking to sell the third time price comes there. Not if you're a 365 trader, where you understand order flows. So you understand that sometimes these areas of value are extremely sensitive. So for the DXY, we might get a slowing down of price short term, hours to days, short term. Because I can tell you on the big picture, if you look at the COT reports, they are aggressively adding long positions. I want to tell you this right now. Smart money is aggressively adding long-term positions on the dollar, right? So from this demand to this turning point there, which is not yet a supply, but reacting in its own right to a supply, my golden ratio fib is right here. This is it right there, right? That's number 1. From a much more earlier swing high to a swing low, my golden ratio is here at the break of potentially market structure. Both scenarios lead me to a perfect buy. I just need to decide where I'm playing at, right? So this is going to be a chart to watch out for, together with what's going on in the markets in terms of sentiment, right? But these both plays here, it's on like a scone, right? Essentially, markets are ready. Look at that. If you were to draw this properly, the way I've given you guys the rules, if you've done the course, there it is there, right? Literally lower wick, reasonable body, etc., etc. And by the way, the remote course is 50% off until forever. Well, not forever, until we really grow the channel. So it is literally a perfect time to learn these rules properly, right? Literally, from fully cutting from 300 to 150 bucks. Why? Because you can't do this without understanding market rules. Please, it's very important. It's not a game. All the stuff that I see on that Nasdaq 100 page, all these Forex pages where people like, and I've been posting some stuff so that you guys see in hindsight that most retail traders think the same. They generally make the same mistakes on a broad range of assets. Literally, everyone is trained to see the same dumb thing on a broad range of assets. So watch out. It's on the short term in the markets, although I will not be in any type of, it's just that for short-term trading as a swing trader, that's not attractive to me. But in the short term, I perceive some weakness, but that weakness could easily come to an end on contact here. And if this breaks, definitely weakness comes to an end there. See, is talking. What do you mean? Whoa. Pause. Sorry, guys, it was just like a weird glitch. I have no idea if anything was missed out or cut out, or I wish Zoom would actually alert you to let you know that, you know, it's stopped. But yeah, okay. Anyways, we're talking about DXY. I hope a lot wasn't missed out. Sorry about that technical glitch. I was like, what do you mean? You know, because I got some feedback, like recording in progress. And I'm like, I've been recording. I have been recording. Right. Anyways, so watch out for this. Watch out for this. Right. So that's DXY chart. I'll be watching, obviously, again, clarity on Monday. But yeah, there should be a few retracements. So things like USDCAD will follow suit the DXY. When I trade USDCAD, do what DXY is doing. Simple. Like I've drilled this into you for a very long time, right? But let's slow down quickly and then check what's coming up this week. Maybe we can make sense of when this could happen, right? A lot quicker, right? So this week we've got starting tomorrow, not important. Let's quickly hit the filter. Oh, okay, cool. Okay, cool. Never mind. As just said, I don't want like the smaller news, right? So OPEC, got to talk about oil, baby. Oil is rallying. So everything that we spoke about with the oil, it's going to retrace, broken supply, it's going to go up. If it goes up, CAD is strong. It's like a comment, a question about CAD JPY. That's what happened to that trade, man. If oil is strong, CAD has to be strong. CAD will smash supplies when oil is strong. When oil is dropping, CAD will be weak. Right. So I don't know. I used to watch these things, but these things are like hours and hours and hours. These OPEC meetings on Bloomberg Live, hours and hours long. I don't think they're going to change anything. I think there's going to be tension. I think there's going to be massive negotiation. I think media is going to take it too far and act like it's the end of the world. And these guys are not agreed on anything. But generally speaking, I don't really think there's going to be fundamentally a big problem here, right? So things should keep going. Their target will be about, you know, Goldman Sachs has oil reaching about $87 per barrel by end of year. And the overall target for these oil companies is $100 per barrel. So they might reach that next year. Goldman Sachs might be right. The point is very bullish on oil at the moment. Right, there we go. Reserve Bank of Australia rate statement, right? So that's something to watch out for. At least it's not like an actual basis point type of thing. But then again, you know me, I don't trade news events. I'm not up at 3 a.m., 5 a.m. trying to catch trades. That's kind of like silly. It's already built in the structure, right? And then USD PMI, very important, right? So we're going to see some manufacturing data, right? So this is Tuesday. So watch the logic of DXY on Tuesday. If this is negative, so if we get 5.8, 5.58, something, 55, something, then this will continue to fall. Markets are leaving a supply, will continue to fall, right? And they're going to use this to do that. If they want to go up now, or they want to re-ding it, right? They want to quickly weaken this area of value right now, right? Like they did last week when the FOMC started to talk. They will quickly have a, so let's say PMI is positive, markets would come back here and ding. Why? Glass effect. You gotta create the glass effect. You gotta make sure you deal with all the sellers out of the way. So watch out for the results of this. This is important. It's 4 p.m. It's normal time. You can watch out for it. And then we've got a lot of stuff to do with the NZD. All right. Official cash rate. That's important because you need to know how much the Fed has and is holding. Like I said, the US Fed has tons of cash, holding cash, tons. Right, and then the Reserve Bank statement, cool. There we go. So this is where traders get this wrong. It's surprising because I tell them this all the time, every month. Don't just focus on NFP on Friday. There is a professional, really good report called ADP. Markets will use that to price in Friday. Prices in everything. This is it. The non-farm row ADP has got a projection of a bullish NFP for Wednesday. It's not about them getting it right or wrong. It's about them going to do their surveys in America and then getting data and saying, this is the data that we found. And we thought the markets would at least have created 455,000 new jobs from our negative call last month, just 374 jobs. But we found in our reporting that the markets only created 220,000 jobs. That means at the time of our survey, which is the whole month of September last month, Delta was a factor. Americans were still getting stimulus checks and they didn't want to go back to work, etc. So the economy is not creating much jobs. So do you think sometimes there is a difference, but the difference isn't wild? It's not wild between NFP on Friday and the ADP report on Wednesday. NFP on Friday, we had a terrible low of 235,000 jobs. So I've forgotten what the forecast was. The forecast was something big, and they only made 235,000. Here, ADP, the focus was big, but they only made 374,000, right? These are the actual figures. Now they're saying we're going to do 4-5K, and NFP is saying, yeah, probably 490, right? So we can already see the parameters. So we don't need to guess what's going to happen on Wednesday. We don't even need to trade it, but we can get a lot of data from that. How ADP operates is a big market signal to what DXY is going to do this week. I won't do a second video on ADP reporting and DXY this week. I need to focus on other things. So please take this as the biggest lesson ever, guys. ADP is important. It's fundamentally a signal to NFP. It happens every 48 hours before NFP. So please check out the, that stuff. I'll kind of like give you guys a heads up in the public Telegram group on Wednesday, but it's a big deal, right? CAD will show up, CAD, unemployment claims, CAD, the weekly ones, right? Don't forget oil on Monday, CAD news on Thursday, right? And then CAD news, unemployment change, unemployment rate, US unemployment rate, right? So it's a big week for CAD and dollar, right? Okay, cool. So not much going on there. And then I've already done this quick drill with you here, going through headlines. So let's close all this stuff and then go back to some charts. I'm going to come back to this thing in front of you here, right? So DXY done, I think done and dusted, right? So let's look at oil, crude oil, and then we'll go to Brent oil, right? We gotta catch into these longs, man. This is like the swings that you want to hold on to for a very long time. This is where my supply was popped on crude oil. When that supply was popped, this is my institutional target, Goldman Sachs specifically, about 87 bucks per barrel. I agree. I have no reason to disagree. I do fundamentally think, though, that this could be more bullish, and potentially we could see it even reached, before the year ends, personally speaking. On my governing time frame, I have the formation at the closing of the month of September, 3 days ago, gave us a beautiful bullish engulfing pattern. Thank you very much. Supply here has been broken and removed. I'm just keeping it because I'm still teaching, on charts in the academy. So it's just easier if I have some of these labels there, so people actually can see what we mean. Right, market inefficiencies, it might even fill this week. If it fills this week, it's going to go back to reopening the upper doors. Weekly time frame, we can now finally delete this. Markets came in once, came in twice, glass effect, broke it, right? We know the rules about that, surely. I'm going to delete this white line because it's really just in the way. I don't remember what it was for. This is the demand that kind of like held a lot of the stuff down. So just trying to make sure we draw it correctly. Right, something like that. There's not much of a wick here on this reasonable body candle. So I'll take the wick right next to it. That would be the next reasonable wick there. Right, there we go. Right, and it's not as big as the bullish engulfing candle, so we've got a reasonable situation going on here. Markets came in, hit the rally, took off. Retest of bullish engulfing candle. I'm just highlighting a lot of rules, right? Fresh touch retest, right? So this weekly demand is done its job. There's essentially, and I remember us talking about this in the public Telegram group at the beginning of the year. I just don't know how many students were patient for this play. I'm not in the trade, so I don't want to make myself better than thou. I just wasn't really focused on oil. But if you were, this is it. We spoke about this a long time ago. A lot of you were trying to find the perfect demand, and this also was a perfect play at some point in time. But you better have taken profits because markets came back down, right? So all these things are there, built in our rules. But anyways, markets are rallying up right now. I don't see. So we need to also learn that sometimes you'll get direction right, structure right, but you also need to consider, do you actually have an entry? All right, I can tell you right now, on the weekly structure of pound USD, I've already seen it. There's no real entry. There's no real setup, right? There's no potential play. There's clear direction. We're going down, but we have to wait. We have to wait, right? So weekly, we have a problem here on oil. I mean, one would make this weak argument, right? Yeah, somewhere like that, right? And that's to pay, man. It definitely would work, but it's not really what I'd like to see, right? It would work, but what happened is if that works, is in one of those situations I'm like, yeah, it's gonna work, but I'm not in the trade with you. And that's just how I am. I really like stuff that makes a lot of sense, stuff that is perfect, right? So if you draw some, I'm looking for some retail trader nonsense now. Look at that. So resistance, support, resistance, support, resistance, right? Support, hidden demand, clash. Yeah, so yeah, I was right. So see there? So that could work there, but you would have to do that, but your area of value is this big for oil. If you do that, just remember that. It's a massive area of value for you to hold that silly buy. And I say silly, guys, because I'm on the weekly. Maybe on daily it's clearer. Maybe on daily there's a demand there. There we go. That's why. Because on weekly it looks dumb. Right. So I am on the daily time frame now. Let's get this right. Let's get this right. Once I get 0.1 and 0.2 drawn correctly, I don't care about what happens in life. 0.1 and 0.2, I just follow suit. So I never want to just be doing weird stuff like that. There's nothing wrong with that as well. But generally speaking, rule of thumb, it is far much more better to follow point A to point B and just extend your trend line. Right. But for the most part, that's what we have. And so if we have something like that for the most part, because you see now it's touching, yada, and then this is your man sitting on top of that area of value, support, resistance, nonsense line, right? That's where institutions drove through and then retested with or without retail traders. And then we had this opportunity here, which is really the opportunity of a lifetime. So this is where we stuffed up. We forgot to look at oil last week in the war rooms, and so we missed out on this. Or was it? Oh, in the previous war room. So this is actually a 2 week ago trade. This is a 2 week ago swing trade. And now we are holding thumbs, hoping for another pullback in price. And it might happen. So I'll definitely have a opinion order here. personally. And then we'll see how that play goes. Let's pull out anti-fib just to see real quick. Thank you. Yeah, oil, there's a trade. Oh, the trading plan, manual trading plan, Excel trading plan, because I don't want to look crazy in the markets. I want to understand my own rules and why I took the trade. So I have a trading plan. I write stuff down. If you're learning from me, you better have a trading plan. You better have a reason, a rationale of why. If you guys are reading that book, I recommend it, at least in the academy. I haven't bought anyone a copy of that book yet. It's been crazy. It will happen though. So many books on this table. I don't even know where it is. I finished it a while back now. Fables of a Currency Trader by Rob Booker. You will know that you must have a rational. When Barnes finally meets the actual sensei who's been teaching all these great traders, he tells him, number one, you can't just jump into Euro because Leroy says jump into Euro. You must have a rational, a plan, an understanding of why. What happens if Leroy gets busy and he doesn't trade? Leroy might not need to trade as often as you need to. I actually don't. But fundamentally, I'm in Euro USD, Pound USD since a very long time, since markets made contact with that governing supply on our big corporate accounts. So I am doing this type of exercise for retail traders. That's why I've got a couple of accounts created around it. And I trade live with you guys on those. They're not small. They're small. They're corporate-wise, a $6,000 US account is small. The other account that I'm using is about 24,000. The 102x, 5x, blah, blah, blah. All those are small accounts, but it's for you guys to see the practical application of the stuff, right? But if I get busy, I don't get stressed out that I'm not trading that week, but maybe you need to be trading. Maybe you need to be in the markets. Maybe you need immediate money or not immediate, but you need to start building your reserves right now. So you must have a rationale. You must have a trading plan. You can't wait for me. Like I can't do war room at 4 p.m. So by God, I'm up early today. It's now almost 9 a.m. recording this stuff for you, but I could have been just tired and not done it at all. Then what? Then you see what I mean? And then you do your own thing during the week and you blow your account. And by the time you have a war room next week, Sunday, you don't have capital. We have to get to a place where we actually understand together what markets are doing, so that when my job here is to make your analysis better, not to just feed everything, right? So long story short, I'm willing to take a trade here, but this area of value here hasn't received a retest. Be very mindful of that this demand here, the very first one, has not received a retest, and it deserves a retest. So this is, okay, maybe it's a PCP to later area, but this to me looks like a bullish engulfing pattern. So just be very mindful of that. Be very mindful of how low price can dig into demand one, focused on demand two, just to get a retest. So I wouldn't be surprised if markets do this, that would be great. But if markets also do this, that would be also expectedly fine. All right, so just be mindful of the fact that you've got this double ditch situation here, because that's a possibility, right? Because demand number two does not have a retest. This needs a fresh touch, right? So markets could do both, could kill two birds with one stone, fresh touch, retest. All right, so please be mindful of that, right? So oil, look out for why, because I really want to get into this thing. I really do want to get into this thing on the H4 time frame. Okay, that's even interesting. Wow, I was about to move on because I'm trying to teach the new students to stick to the daily time frame only. I have no problem with H4, but it's just to kind of like drill in some drills, discipline for the next 3 months. Look at this situation here. So in the H4 time frame, digs a little bit into the daily, right? So this little bit, just a little bit there, that confirms the daily. But on the H4 time frame, it takes out a demand. So it takes this out, breaks it completely. And now on the H4 time frame, there's really nothing here. I mean, there's break of market structure, which is a straight line there, but there's nothing there, right? So the next reserves are down here. So this is what I'm saying. Once again, be very careful that if you're taking this on the daily time frame, right, that you understand that you're looking at a point plus difference of almost $3 in oil, right? So this is, generally speaking, until better market accuracy is presented, one big area of value. which is very expensive. Very, very, very expensive, right? I mean, if I could find out a commodity pip calculator off the top of my head right now, I would, but I actually can't think of one right now. So you're gonna have to kind of like just double test this stuff. I'm looking here on the other screen to see if I can find one quickly, but I cannot. Pip cal. Right. If that doesn't help, then we'll move on. Okay, I think I found a ticker. So oil's ticker is XTI USD. So when you find a ticker, then you can find a calculator. Oil's ticker is XTI USD. That's the pip value calculator. And I just want to calculate how big this area of value is. I'll show you what I'm looking at now. Just give me 2 seconds. It's not good, man. Sorry, guys. I'm trying to quickly learn this thing. That makes no sense. Units trade size. What's the unit trade size? Right. I might have to come back to this another time. Use one low Forex pairs. Please check that. I don't know. 100,000. Yeah, we'll come back to it. It's just wasting a lot of time. But yeah, just be very careful. Just be very risk averse. Be very risk averse. Be very risk averse. This could happen. So on H4, if markets were to drive really way down this hidden demand here, which took out that demand, then obviously your area of value can be reduced to that, which is actually a far much more better trade if you think about it, because now you're really getting the ultimate low. But price might not drop that low, right? Price might definitely not drop that low. So if you really look at it carefully now, this is what your areas of values would look like if you're to separate them, and price might not drop that low. Okay, so another way to split your risk is to have 2 trades and accept that one of them is going to go wrong. So I'd have a pending order there, and if my stop loss gets there instead of being dragged, I get activated somewhere down here on that H4 chart. Generally speaking, that's how I would separate my risks. Right, so if I'm in this and I'm in and we're going, but if I get, and the risk here is if you might get a hit here, right, and then price continues up before triggering you. it's a thing. So, but if you've got a lot of time, and it's my last thing, I've got a lot of time on the charts and you're watching charts all the time, then what you want to do is just watch the drop, see how far it drops, and then catch you with the buy stop order. So it breaks here, breaks there, and then you're like, okay, cool, buy stop order. Right, because then you now know that it's now time to go up, right? So all the best with oil, but I do desperately want to be in an oil trade. I want to be in a good oil trade so I can swing it all the way to at least 87 bucks, take some partial profits, and then leave that trade running into next year, because that oil is a good trade to be in. USDCAD, right? So we've spoken about USDCAD. We've spoken about this relationship to the dollar. We've spoken about a lot of things that made a lot of sense at the time. And we took a lot of trades in the public telegram from USDCAD, a long-term swing sell, short-term USD buy. And I posted all that live stuff, me taking the trades and explaining to you what I saw, etc., etc. What on earth is this? Right, so let's break down this chart one more time. USDCAD, price left to monthly demand. Price potentially has broken a monthly supply because the dollar is strong. So this could be a nice place for price. That could be a nice place for price. Markets could be, oh, nothing over there. Right, so this is interesting, right? So if FOMC, if we're hawkish long term, then we're going to get a full recovery, or at least a retest of a trend line or something. Right, because I mean, yes, there's a governing supply, and the governing supply is valid. Don't get me wrong. I don't want you to get confused. But if I was to draw a fib, I bet you that's by my governing supply. This is at the 50% mark. I find this very interesting. 50% mark right here is where this supply is parked at. And it's not really the strong supplies that we like to see in the markets, but it's there nonetheless, right? So a lot is like really, this chart is betting on dollar strength, essentially. It's betting on dollar strength, but its disadvantage is it's a USD CAD chart. So dollar strength might be strong, but if oil starts to really rally, it will pull CAD with it, right? So just watch out for that. Do an MTA as quickly as possible. No clean structure. This is where we're selling the other week, USD CAD. This is the big price drop. I called it a while back for people to take profits. Hopefully people did take profits. Short-term buys are done here. And then now price is coming back down. Essentially, we know that the dollar this week, short term, is going to fall because the dollar is now in an actively engaged daily supply. So we're not surprised to see two red candles on USD CAD Thursday and Friday, because on Thursday, price made contact with the supply, and on Friday, price left the supply. Thursday and Friday, you see what I mean? Perfect correlation. So when we're not surprised about that, and if you look at your dollar index, there's nothing in the way. There's nothing stopping price from falling, right? I mean, unless if you go look for noise on the smaller time frames, but essentially right now there's a clean short-term weakness, and this is a precursor, right? It could lead to this. I don't know. Could lead to something else, so some type of play. So it's just each to their own about whether they want to wait for the buy or catch the sell. For me, there's not really much of a trading opportunity right now. Right, once I exited, it's done. Right, markets returned to a supply on Thursday or Friday, rather, on the 1st, and on the 1st of, which was I think Friday or whatever it was, I was not trading this past week, so I missed it. Right, but this was a very good place to re-enter the markets, and it was missed. So I don't see any other play. I mean, markets could push price up on Monday, some type of short-term retracement, but I really am not a big buyer, right? So fresh touch retest, right? So something is happening at this level here. But for the most part, I think price will keep dropping short-term, right? So that's USD CAD. Good luck with that one. If I do see a setup, I'll post it on the group. USD JPY. You guys remember this long? Beautiful long on USD JPY, massive long. Yeah, and so why do I tell you guys to take profits in the public telegram? Where I tell you guys to take profits or lock or break even, fundamentally because I don't know all of you. Most of you, in fact, in the public telegram group, some of you are not even 365 students. That's why. So a 365 student, it's easier because they know the rules. Like, okay, fine, you should by now. After, if you look at the daily time frame, let's get out of the H4 chart, right? So you should have by now, after the removal of a couple of supplies broken even, you should have by now locked some profits. Like, I don't have to micromanage my students because they know the rules, right? They know how to build small accounts, or at least I believe they do, right? So on the H4 time frame, after all these order blocks, 1, 2, 3, you would have known, okay, fine, now it's time to lock profits because I have already got my 3:1 risk reward ratio, right? And all of this was free money. Right, on top of free money, but there was more free money. But the reason why I say take profits on the public telegram group is because you're not a student, then you wouldn't really know what my plan was, what my rationale was. So rather, I keep your account growing slowly but surely versus keeping quiet and pretending like everyone's a swing trader. And then all of a sudden you panic or you're emotional and you close at the wrong time and you miss your area of competition. It's a complicated game. That's why I hate giving out signals. A lot of people give out signals and give you the perception that giving out signals, this easy thing, are crazy. They don't know your account size. They don't know which areas of value your account size can handle, right? That's why the signal service in the game is a big problem. I can show you this stuff, but if your risk management is poor, it's a waste of time. If your tolerance for market patience is different from mine, it's a waste of time, right? So just watch out for this. This is a beautiful rally, right? And then USDJPY, I spoke about this in my previous war room. We have monetary policy divergence. Dollar is going to get a little bit stronger because of FOMC monetary policy divergence. I saw a couple of articles about JPY might maybe, the Bank of Japan might be changing its stance, right? But until that's confirmed, as far as I know, they were printing money, so there was a different monetary policy. While the dollar is looking to strengthen itself, JPY is looking to weaken itself on purpose because it is a safe haven based on those grounds. Low interest, in fact, zero to low interest, etc. Right? But on the governing time frame, we have hit a roadblock. On the governing time frame, we have absolutely hit a roadblock, and that roadblock is fundamentally based on a monthly supply. All right, and monthly supplies, guys, must be respected. They must absolutely be respected, right? So I can see, remember, as we spoke about this many times before in the channel, right? Suppression in this downward trends, meaning there's no supply to slow price down. So when price breaks out, you want to be part of that breakout, and it broke out. And market's been going up. I don't think anyone was inside these trades when it broke out, but this is a good thing to learn. Euro pound GP, right? There's literally some suppression, and markets just broke out to the other side, right? So markets all the way up there, and now we have to wait to see how strong these supplies are. So for now, for me specifically, I'll be watching, because if the dollar gets any stronger, look at this beautiful strength here. Right, then it will propel. If it slows down now because of what we are seeing, in anticipation of news, whatever it is, then I would love to buy the dip on USDJPY. I would absolutely love to buy the dip, and this could be a good place to kind of like experiment on. Right, I see a 365 candle there. I'm going to pull up anti-fib. You guys can see how I'm switching around candlesticks, line graphs, and all that kind of stuff just to get a better read of price, right? So that, yeah, naturally 50%, which is a good retail trader area, right? We could get some action there. This was that 15-minute supply signal I gave in the month of August. The supply held, we dropped here. This was on the 50-minute chart, but I'm on the H4 time frame. Well, it's obviously confluence, right? You get 1, 2, and then finally, as usual, right, we expect PCPs to be drained out, right? So I know for a fact there's no more supplies in here. So if there are no more supplies in there, that means buyers are exhausted. If buyers are there, buyers might be camping there and hiding and waiting. If buyers are camping and hiding and waiting, there goes my 365 candle. It makes sense. So this might work a little bit. It's a C-class trade, right? It's a C-class trade. So just be mindful of that, but it has potential. It has potential. Right, so pound JPY, we have a potential buy trade here. Please risk as little as possible, because if this fails, right, and number one, you just want to make this nice and big. So you want this whole, you want to cover, you want to protect this entire area of value. And there goes your wicks up there for your area of competition, right? So just watch out for this level, right? I wouldn't be surprised if you're in it, risk little and hold until your stop loss gets hit. Don't see negative for two seconds and then get out, because price might dig very deep into there. Or essentially just wait down there, wait somewhere here, essentially. Right, so this would be a better outcome, but only, time will tell. This could be a better outcome, right? USDJPY. I might place a high risk pending order there. That's like a literally 1% risk, and I'm open for it to being washed out, right? That's USDJPY done. So I just want to double check USD oil, USDJPY done. I did gold. I did Nasdaq, I did DXY. Now we can get to what a lot of people want. So the goal for today's war room is euro pairs and pound pairs. There's so much, guys. I don't think I'll be able to do them all in one war room. I don't think so, because there's just a lot. And if I was doing this live, what I'd have done is I'd have made you guys vote for what you want to see first, pound pairs or euro pairs. I don't know. This is USD Swiss franc. I'm just quickly seeing something. Remember, got a strong dollar. But the dollar strong, franc will be punished. Price did arrive into a weird demand. I say weird because this could potentially have broken it right through the news, and it did slice through. And then markets kind of like were like, nah, this was a market crash because of the news. There's still some buying power left here, or they restored buying power. Markets went up, came back down, etc., right? So on the weekly time frame, we've got similar motions. That's a PCP there for the upside. That's encouraging, but silly as well, because it's literally PCP to the upside just outside a supply. Actually has made contact with the supply. So it's made contact with the supply on Friday. I anticipate price will drop tomorrow. Why is price dropping? DXY chart once again looks weak, leaving a supply. This is the daily time frame. Markets Thursday, Friday, literally falling, right? So that's happening there. But unfortunately, I don't see a clean entry. I personally don't see a clean entry. Right, so I'll be interested to see how markets react to that trend line over there. And then maybe if price was to break out to the other side of that trend line, I would then be interested to take in the test. Bearing in mind, I'll be watching my DXY levels to see when dollar weakness will come to an end. Right, but there's something there. There's something there. There's something there. We shall see. Couple of levels to look out for, 1 and 2, maybe, and 3. Right, so I'm not interested in trading that, but if it does break the trend line, then yeah, sure. I'm happy to come back to it. Right, guys, so what are we doing? Pound USD, Euro USD. Think quickly, Leroy. Let's look at Euro. Why? Because Euro USD is the lead indicator for what pound USD will do. So let's kind of like look at Euro, and then we can refocus on a couple of things, okay? Let's look at Euro first, and then we can do. So there are a couple of Euro pairs that I want to look at, right? So now I want to talk to you guys about market sentiment around Euro and et cetera, retail traders. And then after that, we can then discuss, you know, a couple of trades. And if there's time, we can then maybe make a few pound pairs, you know, a little bit of pound analysis, if that's okay. Right, so Euro USD. So let me just quickly show you guys something, right? This is called this is called it's a sentiment analysis, essentially, right? And when it comes to sentiments, there are different types of sentiments. This is not market sentiment. This is measuring a clientele base, right? A data population of retail traders. Their sentiment, their mindset on different Forex pairs and assets. And here's the rule for me. And I mean, I think you guys can find it easy, like forexclientsentiment.com. Just type that in, because I'm not in the live with you. If I was in the live with you, I'll just quickly copy and paste this and put it on the chat. If I remember, I'll put it in the description. I can try and remember to do that. So I'll put the link down in the description below. There'll be remote course link, wealthy in 3 years link, and this link down there. I'll add it to the description box. This, guys, is an indicator, and not like how you guys use indicators in trading. No. It's a sentimental indicator that lets us know where the trading opportunities most likely lie. What does this mean? It means if 95% of retail traders are always wrong in the markets, just do the opposite of them. That's like a starting framework. 62% of most clientele retail traders in the popular Forex market, 62% are long on Euro US dollar. They want to buy it. 62% are in buys. Their pending orders have already been engaged. They have set pending orders on a wide range of brokers, so the brokers already know that these guys want to buy. This is a contrarian indicator. Contrarian indicator means if 62% of retail traders want to buy, we want to sell. Now, I've been teaching this for the last 2 to 3 weeks in our live class course, and I keep telling people that if I already am in a little town. I'm in a little town called Grahamstown. But if I'm in a little town, yeah, Grahamstown, and I like Jags. So generally speaking, I like Jaguars. So that's kind of like the car I'll just routinely keep buying because I like Jags. And I own the only dealership in my small little town of Jaguars, right? Jaguars. And there's like 3 Jaguars left in my dealership. And there isn't any other dealership in the town. It's just me and my Jaguar dealership. I have a monopoly. Right, I have a monopoly, especially if I create good ads and promote Jaguar, the Jaguar lifestyle, Jaguar car, With my only 3 vehicles left, I can control the price of my vehicles because I have an overwhelming demand for the product. There's more people than vehicles. That's number 1. But this relationship, as much as it's supply and demand, makes sense. The The relationship falls apart immediately if I don't have people to buy the car. The people need to exist for them to buy the car. I have a car. I want to sell the car. If I want to sell my car, I need people to buy the car. I need buyers to become a seller. If I want to buy bread, I need Pick and Pay, a grocery store, to exist for me to buy bread from, aka someone must exist to sell the bread for me. That's how I know my asset is use value. If we're looking at EURUSD and we're thinking in two minds, there is someone called a retail trader who, generally speaking, is looking at silly indicators, support and resistance, silly trading strategies, is in 10 signal service groups, and they're getting signals from different people. He has no idea what the rationale is behind the signals, doesn't know why they're buying or selling. They're just buying and selling, blowing counts left, right, and center. And there's someone called smart money who actually controls the markets, is a market maker because of the capital and the amount of cash inflow they put into the markets. One of them is right, one of them is wrong. One of them is right most of the time, one of them is wrong most of the time. Statistically speaking, depending on each broker, brokers are different, but it will range from 75% all the way to 95%. In fact, your broker somewhere on their website by law should tell you this. There is a 75% to 95% risk on our assets. Most of our clients lose money. This is the high rate of losses. This is why I want you to get this today. If a retail trader fundamentally, and I'm talking about people who don't understand how supply and demand works, as soon as a retail trader, after their indicators, their research, their senseis, their Forex gurus, whatever it is that brought them to that frame of mind. If a retail trader decides they want to buy an asset, I guarantee you market conditions have been created. That is not how you spell conditions, right? There have been market conditions that have been created for the retail trader to believe in buying. Why? Because if I want to sell my Jaguar, I need someone to buy it. If I want to sell EURUSD as smart money, I need to convince the average Joe in the markets to buy it from me. If I want for me to make money, and as a seller, I need a dumb buyer. Why do we call retail traders dumb buyers or dumb sellers or dumb money? Retail traders are dumb money because when we are selling an asset, we believe that asset is now intrinsically, fundamentally overpriced, overvalued, and must now go down. But for them to jump on that same boat, we need dumb money to believe the asset can still go up. The asset still has more value, right? So they are dumb money because they always do the opposite. Now, if you look at this sentiment analysis, 62% of indicators want to go up on EURUSD. I already know I'm buying. I already know I'm selling. Because why? We've spoken about this. DXY has taken out 3 supplies. We counted them. 3 supplies. That's a strong dollar. It's taking out supplies. 3 supplies have been taken out. That's a strong dollar. FOMC, markets have to price in what FOMC say. He wants to go hawkish. That's a strong call for the dollar. If the dollar is strong, euro has to fall. It's a risky asset. If money is coming into safe havens like the dollar, my risky assets are falling. We can go to the charts right now. I bet you EURUSD is leaving a governing supply. I bet you that the governing supply has taken out a governing demand. I say I bet you because I know this because I checked my charts on Friday, right? I know what's at play here. So the trading opportunities are, go against the retail traders. There have been market conditions that have allowed 62% of them to be dumb enough to want to buy. Therefore, we sell. We get ready to sell. Why? And this is where it gets tricky. That's why I don't like showing people all my tools all the time, because people then rush into the markets tomorrow and sell. If retail traders are buying, our rules don't change. Why? Because markets, they're going to buy up. We won't buy with them. We need to be aware of what they are buying into. They need to be buying into a supply. That's where we catch them. They're going to create a lot of momentum. They're going to be sending those screenshots. You know how you're profitable, you send a screenshot on social media, then before you know it, you're no longer profitable, then you just you disappear. That's what's going to happen. So we're not going to buy up with them. We're going to let them create momentum to the upside. When they make the dumb mistake of holding their buys in an area of value where supply exceeds demand, in an area of value where smart money is waiting to sell, where they're going to sell, we are going to sell. Right, so we're going to let this play out. So that's why I like looking at the sentiment. I mean, it's been a long time since I've come here, but a lot of these things. I mean, if you just see from the stuff I've just spoken to you about in this today's war room, I just told you USDJPY, the monetary policy divergence. So we wanna buy dollar, right? It's going to be strong. Let's see if we can find it here. We're going too fast. It's EURUSD, Pound USD, NZD USD, USDJ. There we go. Look at this. 66 retail traders want to sell. They want to sell. Right? And look, for the most part, it's a good trade. It's not a good trade. It makes sense, kind of, right? So there's supply. But like I said, there's monetary policy divergence. If JPY kills interest rates a bit more, principal money, if dollar remains hawkish, this is a buy trade. AUD CAD. Right, so you can come here for the trade of the week and then go map out your levels. You don't take a trade because of this. We now know that where is dumb money focused at. Dumb money is focused on the small shiny silver coin. We need to find the gold pit. That's what we need to go do. And this is a beautiful play here, right? So US oil is going up. We know this, right? If euro is dropping, pound will drop. And pound, guys, all this stuff, your governing supply is telling you all this stuff. Your governing areas of value have told you all of this. But this is just to give you that extra confidence. Do not go with the grain. If it's mixed, then we have to do deeper analysis, right? So we will, but these easy trade calls, simply go do what your governor is doing. Your governor will never be on the side of retail traders. Never, right? Most of the time, never. Right, so you want to be part of the smart 38%, the supply and demand traders. This is you and me here. We want to join this group, make sure we are ready at the right levels, right? So let's start off with Euro USD. And because we looked at the DXY, we're going to look at the EXY. Market gap on the 16th of June. Right, this is the FOMC meeting. The one I've been talking about forever, right? 16th of June. And then markets then created what is known as a professional gap. There are two types of gaps. Gap trading is actually very important. Right, this is just to confirm and continue sell pressure. Straight after that, markets came back to retest the gap and then dropped. We know that. Rest is history. We've done this many times. Let's go to the governing time frame. You remember this demand that pound USD doesn't have, AUD USD does not have, or at least markets might have them, but markets not yet arrived at them. You see this demand here? Taken out. There is nothing. Nothing. I don't care. There's absolutely nothing in the world right now, as Trump would say, absolutely nothing in the world stopping euro from falling. The index, the euro is weak. Why? Price made contact with the supply, and we found that supply to get hit twice, but we found this demand to get demolished. Markets are selling, and finally we have the beginning of the next 10-year trade. The next 10 years is going to be a powerful push on this demand. But markets have to get there, to go back. There was a COVID recovery, right? March 2021, COVID recovery. Markets have to come collect some buy orders, and then we get moving. Our supply that's pushing price down right now, risky now, right? It's now got glass effect all over it, which is good. So markets have done what they want to do here. So by the time markets come back in the near future, sometime next year, and this will be like medium term, to very long term. So actually long term to very long term. So that's about weeks to months, months to years. When markets come back here, there should not be any problems. All right. So markets have broken this daily demand. Markets are falling. This market moves first before pound USD normally. And if the euro drops, pound will follow. If euro rallies, pound will follow. Last week's war room on Sunday, someone asked me to analyze pound USD, and I told you guys I have no interest in buying any of these assets anymore. And you saw why. You saw why, right? I don't take low probability trades because generally speaking, if it's low probability, there's a high chance it's going to go against you. And those buys worked for a day or two and then completely turned south. And we spoke about that in great detail in the last war room, right? So this is the weekly time frame here on our index. And I'm going to quickly come here. All of this removed. So any upward rallies are essentially, pushing price to the upside just for simply a better sell opportunity, in my humble opinion. I'm so sorry, I'm getting a little bit distracted here, but I'm just counting a couple of things before I move on. This is quite interesting. So significantly, I don't know if you guys can tell, but there are two demands that have been broken. Literally two demands that have been broken, right? So 1, 2, and markets are going. And if you look here on your weekly time frame, in terms of momentums, there's nothing. It's literally a twin of your governing time frame, right? There's absolutely nothing. There will be slowdowns here, retracements, blah blah blah. But markets must come down. Fundamentally, we want to get into a good sell position, right? So this is the index now on the daily time frame. This literally is going to be like a direct replica of EURUSD. This EXY index is a direct replica of EURUSD. Right, so I need a turn. For me to draw a Fibonacci, I need a turn. But let me anticipate that retail traders pump markets a little bit up. That's unrealistic. I need a turn. I need a turn. So I don't want to catch a falling knife, although I must say, if you see this happening, and I will go to the actual EURUSD chart, markets will generally drop fast. There's hardly ever enough strength for this to happen, right? And I could be corrected, and my market's price might come out, but this is a PCP, so no one is going to want to retest it twice. But markets generally hardly do that. They just kind of like stop there and they drop. So it's really quite a tricky area to catch, because you don't want to be holding you don't want to try and catch a falling knife, right? You do not want to try and catch a falling knife. All right, that's a possibility, right? So we've got old school supply and demand, not institutional supply and demand, but broken demand becomes supply. Or 1, 2, 3. Yeah, so that could work out. That could work out. Although the higher sell is here. I'll double check all of this in EURUSD. Just bear with me. It's just difficult to really time this now, because you want to make sure you're with the right bus, right? So this area of value is long, right? So you got 1, 2, 3. Complicated 365 candles, then a pro gap breaking an opposing demand and market slide under it. Then you've got the fact that when EURUSD or any chart makes a pro gap, 9 out of 10 times, the gap gets filled by markets just weakening into that area. So markets could just stop right there. So actually, unfortunately, a trade for people with slightly bigger accounts, because then you can swallow both areas of value. Okay, that's not bad. That's not bad. 95 pips this side. Let's go to EURUSD and then we'll continue this analysis. I'm going to go straight to the daily chart and then we'll come back to other stuff. So this is what we're looking at. Everything that I've just done right now is to do with this area here. Spoke about how this was there, spoke about how we saw this trap, we spoke about it. Finally, I can delete this area of value. I've been waiting for it to be gone. But maybe before I do that, let me just show you what this looks like on the weekly time frame, so you can see what I mean by there. So this line, after price broke here, it's difficult for me to even believe that we could have like a green week or whatever. It's very difficult for me to believe that. on EURUSD. It's very, because once markets like make such a grave move, a big move to remove an area of value, remember this area of value is quite big, right? Class effect, right? So once that kind of like plays out, this is a dream, or even this, all of this is a big dream for me. I don't think so. So we're looking at a very small push up to the downside, and hopefully it could be there. But again, for now, my daily area of value is also, you know, unconvincing. Like, it's really not the most convincing type of reaction, type of market reaction that one could, you know, would be looking for or hoping for. Yeah. So yeah, it's not the news you want to hear, but it's going to be a waiting game for EURUSD for me. I mean, I don't mind any of this. I like it. I see it. I believe in it, but I would like something a little bit stronger. So I'm going to have to watch this level very carefully. I mean, this is a true area of competition. Like, we've drawn a line, blah, blah, blah. We get some type of strong imbalance to the other side. Number one, we should, okay, instead of deleting this, because I am teaching a lot, you know, for the next few weeks on my live classes during the week. So I don't want to remove this from my charts, but generally speaking, you delete it, right? But I want students to understand why. Got a downtrend here, right? FOMC still untouched. That's really set the tone for these risky assets. So all these buys have just been short-term rallies inside a toxic relationship between supply and demand, a relationship that always leaned towards supplies, right? All the time. This has just been a simple reaction between supply and demand, and markets just simply pushing price, literally just pushing price to that particular upside or downside, but more towards the downside. The downtrend has been consistent. Every time there was a rally, rally was sold. Every time there was a rally, rally was sold, right? So just be very aware of that. So yeah, okay, trade call, risk. So yeah, there's action here, but I won't lie, the better sell is at the top. Why? Markets will always sell high. They'll always try to sell high, at least to the very least, right? So if I pull out my Fibonacci, 50% here, you could get lucky. Golden ratio there. That's the catch. This is inside my golden ratio. This is the priority sell, right? So let's see how much money these idiots can put in, right, to get price up. Let's see if smart money will throw in a bone, right? Try and push price up there. But for the most part, you know, you could even get a situation like this. And markets are like, yeah, but remember, Leroy, we've got break of market structure here because of this broken demand. And this is actually the latest fib point, swing high, swing low. So therefore, Leroy, we're taking this and we're going. Don't forget that. Scenarios. So for me, again, that's why I drew my area of value the way I did the first time. Just thought it would be worth explaining, right? When you get a massive 3-5 candle like this, you're not sure, you're going to have two. For me, I'm going to have two pending orders. I don't want to lie to you. Pending order number one is here. Now let's look at the distance of price in relationship to the dollar index chart. There's a supply that might need 3 or 4 days to get to. Right, 3 or 4 days to get to here. There's a supply like that. On the DXY chart, we have a demand that might need 3 or 4 days to get to. Like this. Did you guys see the relationship? Simple. So when the dollar is cooling off, coming down, euro will come up, and retail traders misread all these things. So they never think about what is the big picture at hand. The problem is you can't time the market, so you don't really know how long it will take. What I hate about the supply is it's a low supply compared to other supplies. Number two, what if markets come here with the arrow, right? Sharp, strong, fast, right? So literally come here straight with no type of accumulation. So I don't like a trade like that. I would far much more prefer markets accumulate and get closer and closer to a trend line, right? Then I'm interested. Or if it comes up straight, then it's coming up into this area of value like that. So risk very smartly here. Personally, because you're going to be interested in what I'm going to do, I've got, you remember, it's about accounts, guys. It's about how big your account is and how much risk you're willing to take. All trading involves substantial amount of risk. So I could go 1% there just to get into a swing, knowing that for me, unfortunately or fortunately, we've been in Euro USD for a while, all right, or at least on the hedge accounts. On my smaller personal accounts, I don't have a position to play. So I could go enter here 1%, then put 5% there, right? Because it's between one of these two. Let's go to H4. No. Prices leave it. This is Thursday, Friday, right? This is kind of like direction, but on the H4 time frame, this is the whole story. So on the H4 time frame, then we start to see potential accumulation. Okay, so in the H4 time frame, we might see something like this. And I just want to see what that looks like in relation to the daily. Yeah, so I'll be playing this on EURUSD on H4. I'll be playing it on H4. If markets are not too parabolic for me, I will then take a trade here. 1% once again. It's not the best sell setup ever. And then I'll always have a bigger 5% lot size higher, right? Just for the sake of making sure that I'm in a winning type of trade, right? Okay, does it clear? I hope that's clear. I hope that's clear. I hope that's clear. I hope that's clear. But I'm looking forward to seeing this play out. Pin in order 1, pin in order 2. If I take a ding here, then this will definitely work. But we are in a guaranteed downtrend. Governing supply confirmed, weekly supply confirmed, weekly area of buyers completely removed. So it's just about catching retracement. This is all hanging. So check this out. Euro USD is waiting to see what DXY is going to do. Well, as soon as DXY moves, USD will do the opposite. If DXY goes up, USD will drop, blah, blah, blah. Pound USD then will follow suit. And risky pairs will just follow suit. They'll follow suit because they can't. The dollar is strong, risky assets are weak. The risk assets of the dollar is weak, risk assets are strong. All right, essentially, that's how I want you to think through it, right? So let's move on. Let me just quickly tick that EXY and then Euro USD is covered because I'm hoping that we can, and maybe we can quickly do a comparison of pound USD in case I don't finish all the pound pairs. So that's the other worry. That's the other thing I'm worried about. Right, so let's see. DXY, the index of the pound. Ugly, can't see anything. Old fib. Right, so demand was removed, as I explained why. So no need to repeat that. This is interesting. This is interesting right there, right? And then the imbalance vibes. So we called it. We called it. Let's delete this. And then again, governor is weak, governor is setting, you know, everything that we spoke about. There's nothing to catch price in a very long time. There's a lot of market accumulation, etc., etc. So we should be looking at a play to eventually sell. I'm not buying into pound USD. I have no intention to buy. Watch out for market pro gaps. Watch out for market pro gaps. Markets will have to fill all those gaps. So watch out for that. All right, but let's get a clearer picture on pound USD. I mean, it's really like a duplicate analysis, really, if you think about it, right? So this is that BOS structure that we spoke about in the last war room, and I explained to you. I think we're looking at a PCP just before market opened last week Sunday, and I was like, look, man, I don't even think we're going to make it up. I don't think this bias will be strong, blah, blah, blah. And lo and behold, markets kind of like dwindled up and then just fell. Right, this is H4 time frame. We just saw that Euro USD looks like this. On Euro USD, the supply is not yet broken, right? Pound actually rallied a little bit quicker, which is quite interesting, right? So now retail traders are gonna, those who are, I guess, intuitive enough not to buy pound are gonna try and sell pound here, right? I will not be there as attractive as it will be. I'm going to wait for markets to get here to sell. That's just the truth. And I'm hoping it's a similar mirror of where Euro USD is. On the daily time frame, it looks very scary because again, markets are a bit parabolic. So I'm hoping very soon for some sideways. So I'm hoping this trade takes its time. Like, you know, come to me on Friday, accumulate a bit, trade sideways for 2 days, you know, do something, you know, relatively safe for me to be interested in trying to put a pending order somewhere here on the daily. But you can see on the H4, the cleaner area is somewhere up there, but you don't want to miss out on all these broken structures that were happening on price, right? So that's my trade idea on pound USD. Okay, now let's walk through. Let's walk through charts. So now let's go through euro pound, and then we're just going to drill as quickly as possible, right? So markets. So same play. We marked out a supply last time. Markets literally are in there. The compression that I spoke about maybe 2 months ago really has been faltering. There's a lot of compression here on the daily time frame, which means there shouldn't be any supplies holding price back. What markets are smart though are doing is they create new supplies to delay this push up here, right? So there was a big target for me up there once upon a time. Ended up just buying a few rallies in when I realized that this is what they were doing, creating original turns, blah, 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 concepts that I thoroughly teach on, right? So let's go to Saxo. Let's break this down. Guys, I'm just going to increase the speed a little bit because honestly speaking, we are running out of time, or I'm running out of time. I'm starting to get signals from the family that it's now time for me to move on to the next thing. Bearing in mind, I still need to complete my page, 10 to 15 page document on what to buy, what cryptos I'm buying, what stocks I'm buying for the month of October, which brokers, etc. That's how the Wealth in 3 Years program goes. I would love that to be out this weekend so that people don't get annoyed with me for any delays. Just that I was low battery on Friday. Low battery, guys. My body was, ugh. I'm low battery now, but much better. Right, so internal supply is broken, right? This is just an ugly chart. This is the John Boris drama, John Boris election. Ugly, 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 ugly. Right, so one wants a clean sell all the way down here. I'll tell you right now. This is me. Right, let's see if we can find some play. Let's see. Nah, not much. Euro pound is a little bit too mixed. So see when it's like this close of 56.44, then you just want to kind of like stay out of it. Not stay out of it. I'm just saying when it's very unclear what retail traders want in life, you ignore the sentiment indicator, this one here, right? So now let's see if we can find trades for us, for ourselves. And Rita, when we first took this euro pound trade, we're literally trying to catch that top supply and then hold it since then, right? And then markets have done some weird stuff here. I mean, this chart is just a nightmare, right? Markets have been dilly-dallying, breaking demands, then reacting to them, breaking demands, reacting to them, bullish in government, retest, touch, first touch, all that kind of stuff. And then consolidation just on top of a demand, which implies glass effect, right? Implies that there's going to be some continuous breakdown, right? And then on the weekly time frame, we start to see that these massive towers rallies are always sold and extended, right? So what do? We start to think about our structure. It's technically a higher high, higher high, higher low, right? Higher low, lower high, right? So markets have been slowly but gradually coming down. And then now I want to draw the extended low point of the weekly wick. You really can't see it on those monthly candles. It's kind of like swallowed, but there's the low point there. Now I want to make sure I match it with a reasonable body. There's the reasonable body there. Right, so that makes sense, right? There's a low point there. So markets essentially have been saved several times by this demand, this long-term demand. Look at that. Crazy, right? They've literally tried to hold on to it with dear life. So adding new order blocks, adding more demand to kind of like put a bandage on glass effect, right? That's a bullish engulfing candle, etc. Beautiful imbalance in the next one. And our markets have just been slowly but surely moving to the downside until recently tried to shoot up. But I think it'll continue down because they took out this demand along the way. And this is what I mean by compression, right? There's a lot of compression here. There's a lot of compression here. broken demand, etc., 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 etc. Right. So this is what we have on the weekly time frame. Again, for me, doesn't really inspire any type of confidence in any specific trading ideas, except for the fact that markets created a supply after breaking out of compression, and then that supply was recently engaged about a couple of days ago. So this is really more now mirroring the DXY chart. I bring these things up because it's nice to, when you start to pick up these correlations and patterns and similarities and how different pairs affect each other, you'll start to see. Right, so Thursday, Friday was a sell-off day into a demand. This is a demand, but then markets are still on another demand. This demand is being tested there and there, and then there now, and then this breaks, and this is going to break because of glass effect, and markets will be landing down there. But is there a place to enter? No, I don't see a place to enter. I mean, if it's an official sale, then even this is ugly. It's not a good place. Euro pound, no trade for me personally, right? I'm not trading it. I'm not looking to trade it. Euro AUD. Another well-behaved chart that's literally followed most of our trade calls. Told you guys to sell up there, blah, blah, blah. And markets are dropping now, right? And for me, you know, the test is going to be this trend line, because this actually recently became a buy profile asset. If I remember correctly, I could be wrong, but yeah, this found its major turning point demand, and whoopa, it's just been on a rock and roll. Look at where our major turning point supply. So markets hit that major turning point supply. COVID. So it was that classic sell for 2020. Right now, I remember. And then markets landed on a trend line created by its major turning point demand in 2012. 10 years plus 2012 is 2022. Banks think in 3 months take profit in 1 year in a 10-year plan. And now we're in towards the end of 2021. This 10-year plan might be coming to an end, right? This uptrend is a 10-year plan. It might be coming to an end. If you think about it, this is literally 2008, 2009, all the way down here, and then all the way back up. This is the whole cycle. It's a 10-year plan, right? And it's not give or take, but markets are going to arrive at least at a structural area where we should see some type of commitment, either from supplies, where supplies will break through everything, or from a demand, where demands will hold suit. So if I do something like this, this will be interesting, right? So there's a demand significantly close by, so to speak, to catch price, to almost like stop it. It's got a beautiful imbalance. It works. Let's go down. Let's drill a little, right? So this is where we are on the weekly. Got a big red candle sitting on what could potentially be a daily demand, because on the weekly area of value, there's nothing. In fact, on the weekly chart, what we can see is complicated 365 candles, right? So a PCP for selling. You guys see it? Right, PCP for selling there. So that's quite interesting, and we can see that the sell here is the signal that I gave last time. Markets have gone, had a good feel for it, a good red wick, and I think this is going to get removed. It's going to be like how Euro USD had to remove that level on the weekly, and then we're going to get a clean break to the downside. Then there are going to be a couple of, you know, stops and bumps in the road. I presume that will allow for multiple retracements. I think I want to get back into Euro AUD, man. I just don't know if markets, I mean, we took profit together. I just don't know if markets will be willing to share, all right? Willing to share this opportunity, right? So if you just draw this across, and all these other zones are just teaching zones, I can remove them for now up until we get some type of clarity, all right? But the first real sale was this one. That's the first real sale. And markets went in and markets sold. Look at that. This is interesting, but then you can see markets are at the demand and then pushed up and then pushed down. Right. So that's also quite interesting. This looks tested. Right. So I am not a fan of trying to buy Euro AUD at the moment. I'm not a fan of that at all. It makes no sense to me, even though it's at a demand right now. I'm not a fan. You know, I'm forced to think about taking that 365 candle at the top there, but it's not a high probability setup, man. Let's go back to candlesticks. It's really not. It's really not. I mean, I can see here green candle, massive bearish engulfing candle, pattern, and markets do retest it and then drop again. removal of a demand. Fantastic, thanks to this bearish engulfing pattern. So I know that supply is strong because it's coming from strong supply. I get that part, but I'm not in a rush to kind of like, let's see H4. Right, so this area here, let's draw a new one, just so we're not confused. So if I do this, make this black, make it thick 3, then make the inside yellow. Let's make it white, right? So this is what it looks like on the daily. Now, if I go to H4, right, you can see dump traders bought into an area of value. So we did the opposite. When dump traders came in, we sold against them, right? Fantastic. Now markets then went in, dump traders came back in, we sold against them, markets pushed price up a little bit. But this rejection here makes no sense to me. Let me go back to the daily to make sense of it. This is probably like a weekly supply, right? Or monthly supply. This white boundary, what's this white boundary? I think I was drawing the area of competition on the governing time frame, right? So I see a lot of downside, but the question is, how do we enter the downside? That's the trick now. I don't like any of this stuff. Okay, we've got an imbalance. We've got, I mean, yeah, so C-class trade, those of you who want to risk it, risk a biscuit to make it. This is a C-class trade. C-class trade at 365 is a setup that might yield some good results or bad results, right? So this is it. Imbalance rule met, but we still have to deal with this demand. And again, when price comes back in here, it'll be way too soon, way too close. So this might not work, but it's a big area of value on the H4 time frame. On the 1 hour time frame, we get some type of clarity, which is this. That's a better position, right? So that's where I would wait. If I was taking this trade, I would wait somewhere there, just over there, right? Give or take. And it's a C-class trade for me. This is a 1 hour trade inside an H4 weird week trade, and then daily, which is zero confluence, except for the fact that it's in the retest region. So this trade, the sell could fail, right? And then if it does fail, it should be nicer for us, because then we can then really go wait at a proper supply further up, right? But for now, I'm going to write EURUSD C trade, right? C class trade. I want to keep track, and I'm going to risk a very little bit there, right? Very little, like very little, and then, you know, swing it. Euro Swiss franc, Swiss franc. And I gave out this signal in our public Telegram group. Seems to me that markets had a tighter area of competition. But even that being said, markets haven't actually taken anything off here. They really haven't, right? So good accumulation, but then markets immediately ran down. So we didn't get the trigger, right? We knew it was going to sell, but when it was coming up here, but the markets all of a sudden turned right there, and then just couldn't get over that turn, and then markets broke down. So personally, I wasn't triggered in this thing, you know, and I still have my pending orders, but I think I should make a couple of commitments and actually increase a little bit of risk by opening up my area of competition to cover both complicated 365 candles, right? And then if this fails, a C-class trade, but it's a good risk-reward ratio. But the problem is this has already happened. So normally when this happens, guys, I'd rather wait at the top there. That's personally how I feel, actually. So this is what I'm going to do. I'm going to delete all of this. I'm going to have to delete the Euro Swiss franc signal. Right, so let me just make that, delete the pending order. And then I'm just going to wait for the full swing. I'm going to hope that price can make it all the way up there, up here, and then we shall continue from there. I just don't trust this anymore, right? This is just way too much activity, just way too close. So let's see if we can get some Swiss franc weakness because of dollar. If we get Swiss franc weakness because of the strong dollar, this thing might rally. If this thing rallies, so hopefully we can rally it up into this area here. This is far much more better. Lots of accumulation. Price didn't just shoot back up we'll be watching those levels correctly, but this could be a better play. Sell 2 could be the trade, right? Sell 2 could be the trade. So watch out for that. That was quick and easy. EURJPY, also another good chart from 2 weeks ago. We're gonna have to start from right from the top. Right, so there's still some room for downsides. Guys, I'm hoping next year we can really swing, man. You know, it hurts me every time I have to tell you guys to close trades and then trades, but when we know that the momentum is going to continue, I'm hoping that we can like hold, like we need to, there's so much money in holding, you know, but the rules of the war room is I must take the trades with you the way I told you to get in and get out. But all our accounts could be growing at exponential rate if we just traded and moved on. It's called set and forget. All right, this is still going on. I must apologize, guys. I will do a separate war room Monday morning, 6 a.m., 5 a.m. on pound pairs. I am now low energy, like I can tell. But if you've enjoyed this and this has helped, please, guys, like, at least like. If you're not going to comment with questions, like and share the war room on different pages, etc., etc. I'd appreciate that. Please like right now while you're watching right now. You can do it. I know you can do it. I know you can do it, right? Nothing on EUROJPY. It's also quite mixed. That's fine, right? But the honest truth is the reason why with swing traders, there's only one good trade, one good perfect entry is what I mean. I like to call it the true sell or the true buy. After that, everything is just huff and puff, you know, fluff and duff. But this area of value is holding, price came, we missed this as well. Thursday, Friday, markets came back to react here and they dropped, gone. Gonna have to wait for another retracement, right? It's probably somewhere up here on the H4 time frame. So watch out for that. Right, guys, and this stuff could happen on Monday, could happen on Tuesday, could happen on Wednesday, could happen anytime. So you need to be setting smart pending orders based on smart capital allocation. You know you've got $100 US. You know you have no business putting in 50 pending orders in your account. Like, watch out for that. Watch out for that area right there. Watch out for that area right there. Watch out for that area right there. Right, because anything can go there. Anything can go. Let's pull out anti-fib top to bottom. It is a sell. Yeah, definitely EURJPY. It's a C-class trade, risk little, it could get hit. Right, risk little and let your stop loss breathe. Let your stop loss breathe. So somewhere up there, just above the 7.18 level, that's where your stop should be. Right, and you should not be worried about losing money on this trade if you risk the right amount, right? So please don't forget our cheat sheet, right? 0.01 for every $100 US in your account. Forex is not an overnight game, but it is a wealth creation game. Oh, it's a wealth creation game. Trust me on that one, right? Just do it properly, be patient. Ugly chart, hit a demand. Has it hit a demand? Not yet, but still terribly ugly. Don't really want to be involved in this. What the fluff is going on here? Right into a daily area of value on a weekly. Yeah. Okay, markets are dropping. That's fine. It's fine. That's fine. I actually, honestly, let's start again. This chart is not. It's annoying. The price is on the other side of a trend line, an upward trend line. That PCP is not even recognized, but it's the one holding price down. Price is also seemingly at the verge of being a major turning point demand, so quite lonely down there by itself. And I'm talking about all the way down here. Markets are reacting to something, markets could fall. Right, so there's really not much momentum holding price up. You know, it's hard to say. Markets have deeply dug into this demand here. 1, 2, 3, 4, 5, deeply. So this is gonna break. This is bound to break, right? And the next place that you'll see from a governing perspective where markets might bounce back up is the fourth financial quarter to the first financial quarter of 2022 next year. That's what we're looking at here. Okay, so that's EURNZD. The weekly time frame, you see, even if you know how markets are moving, because markets are not random, and once you can read direction, that's fine. You also need to be good at finding the safest entries right now, and right now we've missed them. I'm not in any of these trades, so I missed Monday, I missed Thursday, Wednesday, Thursday, Fridays, to sell. And now markets, whenever they rally up, they might even break this and come back a little bit higher. So we're going to be watching this with hawk eyes, right? There might be also this situation on Monday, Tuesday. But because there's no clarity for me on my daily and stuff, I'm not taking EURNZD. I'm sorry, I'm going to leave it out. Then EUROCAD, guys, this is the last EUROPay, EUROCAD. And then I'm just gonna close the war room for now. Let me quickly, because I need about another 6 more hours to focus on the Wealthy in 3 Years newsletter. I want this thing out tonight. There's so much to do, because remember, once I tell you what stocks I'm buying, I need to build, I need to capacitate those of you in the program. So we need to plan a one webinar a month will be more than enough, because these are long-term investments. You're not like trading. No. You're parking money. You need to learn how to dollar cost average. You need to learn how to move around your assets. You need to know when to quickly sell one good token or one good stock to get a better, cheaper one. You need to know to kill your entire portfolio during an Evergrande crisis to buy it back during the dip, right? Which is really what a lot of smart investors did right now, right? So I do need time to work on that as well today, Sunday, so that it's all not part of my to-do list on Monday. But more importantly, because I told people it's going to happen on Friday, right? So I feel terribly bad and behind with time, right? So on the monthly chart, EUROCAD is just doing what it's supposed to do. You're just doing what you're supposed to do, right? So there we go, finally. Right, but we need an imbalance now. Right, okay, not a problem. We need an imbalance now. Markets are just trading and trading in that range, right? So let's see if we can get one or be part of a setup like that, right? So we've got a situation like this here. In fact, bullish engulfing pattern right there, doji candle, reasonable body, blah, blah, blah. Markets should start to leave a supply. Markets already retested a downward trend line. We are looking for a sell opportunity here on EUROCAD. Weekly time frame consolidation to leave the areas, price finally leaving. Price finally leaving, right? And then on the daily time frame, price finally left. On the daily time frame, price finally left and leaving again. So class C trade is this. That's class C. Class A, B trade is something like that. What will markets give us? We shall wait and see. But this is a class C trade right here. That's a class C trade. H4 chart. Might even overextend to here. H4 chart. Price might even extend like that. And like that. So what I would do is swallow like that. I don't think maybe it is. I mean, but I don't think it's that bad. Okay, it kind of is for an intraday trader, but for a swing trader, I really don't think that's bad at all. It's quite a big area of value. But yeah, or you could just split it to have 2 trades. So one over here, and then another one over there. Right, you could do either or, right? That's EURCAD. So I'm going to write down EURCAD. And so these are the charts that I've written down are the ones that I'm going to come back as a follow-up on after markets open tomorrow and I do a market scan. So just to be clear, in this video, in this war room, we spoke about DXY, Nasdaq, Dow 30, gold, USD Swiss franc, USD JPY, USD CAD, oil, please don't forget about oil, EXY, Euro USD, all right, Euro AUD, Euro Swiss franc, Euro JPY, and EURCAD. And then tomorrow, I'll then do a separate one for you on the pound pairs. 365, guys, thank you so much for watching. please do me a big favor. I'm just collecting data. I want to know how. I prefer doing things live, but just so I know in this recorded session of the War Room, please let me know if you made it till the end right now. So just write made it to the end on the comment section. I would appreciate all of that, guys. It's just important. I know the best way to keep reaching out to you to help you, right? If you like this, don't forget to like it. And then I'll see you guys on Monday. Link down below for our public Telegram group. Appreciate all of you. All the best this week's traders. Let's bag some pips, man. Let's bag some pips. Evergrande crisis, not systemic. Evergrande crisis for now, not systemic. Evergrande crisis for now will not produce bigger crises, right? I'm sure something else will come up that will do that. But for now, I think we're doing quite okay. While I have your attention, let's talk crypto. Let's talk crypto. Just Bitcoin. We want to look at the other charts. Right, you can see that Bitcoin loved the news about the pill. This is pill. This is the pill. This is the pill. This is the pill. Remember, Bitcoin, you can trade Bitcoin over the weekend. So the pill, the pill, the pill, the pill. The pill is a good sentiment, right? The COVID pill right now is keeping this baby going. This baby is going, but you know, every time I open a Bitcoin chart and I'm like, yeah, but just so you know, I'm going to be selling here. I used to get these weird emails like, aren't you pro crypto? Why are you always trying to sell? No, I don't try to do anything. I don't control the markets. I just do the right thing for my portfolio, right? I look at what markets are doing. Look at this accumulation phase. Look at this, nice. It's not coming to aggressive trading sideways. Yeah, I'm going to sell again. Something's going to happen. Something's going to happen, man. So someone's going to say something stupid and Bitcoin's going to drop soon enough, right? So we failed to break past 50K yesterday. That's been something on our hearts for a very long time, right? So we shall see what happens, but I suspect crypto is going to struggle a little bit for a little while around 50,580 levels moving forward, but we shall see how price handles that. But anyways, this green, that's markets going. Finally some freaking good news, right? Like just any good news, markets now are waiting to create rallies, and this is promising. On the daily time frame, this is very nice. I mean, I won't even lie, this is very nice. On the daily time frame, that's very nice. The fact that we've got a downtrend on the daily time frame that's now been removed, that is pretty awesome. Very nice, right? So there's just all I'm saying is there's just a risk there. There's just a strong risk of markets not easily breaking that supply, right? There's a supply there. That's all I'm saying. And I'm saying that because I know at the bottom there's not even much of a demand, right? So markets have to start creating this, symbolic memories where the buyers find support. So I think they found support at like 40-something thousand or 30,000 or I don't know, etc. 42,000, 41,000. There was some type of holding there. Now the trick now is to make sure that you kind of like keep the retention. You want to keep the attention of retail traders. You want to see better pumps, etc., right? And if that tension holds, then this might become a new demand. And if that's a new demand, then even sellers up here might be in for a surprise, right? So because it's demand plus demand, which is a strong, impulse moving to the upside. So there's a bit of that in Bitcoin right now. But again, for me, I'm still holding thumbs for a better price. I don't mind buying into fractions of Bitcoin right now. But if I'm going to buy a whole coin, I need a far much more better price. I need price to really drop down all the way here, but every month I'll buy a fraction. Right, guys, thank you so much. Shake my hand. I hope you guys are well. I hope I shook your hand at the beginning of the video. Like the video, let me know what made it to the end, and watch out when you subscribe, hit that notification button. The pound pairs will be short because it's just 6 of them: pound USD, pound Swiss franc, pound JPY, pound AUD, pound CAD, pound NZD. I'll drop that for you tomorrow. All the best, traders. Have a good day. Cheers.